Good day, ladies and gentlemen. Once again, this is another recording on chapter 4 of your prescribed textbook. And the prescribed textbook, we are under exercise 4.6. Labor cost is the title of the chapter. And when we read from the theory in the beginning, we would have noticed that there are different ways or there are different types in which employers remunerate the employees, which it is divided into different types in your book as fixed salary, where employees receive a fixed salary that is not based on the number of hours that the employee has worked. And 4.7 was one of those type of questions where we had three executives that were earning 450,000, 402,000, and 260,000 rands per annum, which we converted it when I was doing that question. And previously, example 4.1 that I did dealt with a variable salary, which is the hourly wage, where the employees are being paid based on the number of hours that they work. And now again we come to another question, but the third one, it is what is called piecework, where employees, they get paid based on the piece of work that they have done. That means it is based on productivity or based on production, which therefore means that if the employee produce less goods or services, then less salary or wage will be paid to that employee. However, when the employee has produced many goods and services, even above and beyond the expectations, then is going to get a higher wage or a higher salary. But now, very important to be able to identify what kind of or what type of remuneration are you dealing with. Is it hourly or is it fixed, despite the number of hours that the employees have worked? And we dealt with the topic of gross income. We dealt with the normal salary, gross income, and net remuneration, how to calculate those, and highlighting under the gross income that we need to take the normal wage, overtime, double pay, and all the allowances and all the bonuses for that period, to take all of them into account in order for you to get to the gross wage, which is the wage before all the deductions can take place. Now that is just an overview, and we went to deductions in the different scenarios we dealt with. Pension fund being the first deduction to be taken into account, and together with the retirement annuity just after gross income. Then after we say gross minus pension fund and retirement annuity fund, we get to taxable income. Then after we go to pay as you earn, UIF, medical aid, union membership fee, and other deductions that are relevant. But now we are under exercise 4.6, where we are very short exercise that you will see. We are here required to prepare the net wage for 1 week for one employee, excluding bonuses. Assume 4 weeks per month for calculation purposes for this question only. Second requirement is to calculate the total annual cost to company for all the 4 employees. We are required to do the net wage only for 1 employee, but this company has 4 employees. Therefore, now we need to know the total cost to the company for all the 4 employees, which is an annual cost. Take note, it's an annual cost, and this one is a weekly net wage. And I did speak about the cost to company, and now I'm doing the exercise that has the cost to company. Then after, we are required to do the labor recovery rate, where we need to say the total cost to company divided by the hours that are available. So now let me just quickly go through the information that I'm required to do, knowing that we are doing a wage statement, which is a wage statement only for 1 week. That is very lovely, and only for 1 employee. We are doing the wage statement only for 1 employee, wage statement per week. wage statement per week, we are told very importantly that a month has 4 weeks, meaning the month that we are dealing with, it has 4 weeks. So let us read through and see if can we sift some necessary or relevant information. The information applies to all the 4 employees of Sabre Consultants. So this is standardized to all employees. Employees working hours per day is this 8 hours, which is normal hours. Working hours, except if you are working as a security officer. Security officers work more than 8 hours, and also other industries, which those hours or those 12 hours, they are still treated as normal hours. It's not overtime when they work 12 hours. It is the normal hours for that industry. And also hotel industry does have extended hours that are more than 8 hours, which are still classified as normal hours. It's not overtime hours unless stated otherwise. Working days per week, they work only 5 days. Therefore, now 8 times 5 will give us 40 hours in a period of a week. Then if we times it by the 4 employees, then obviously that will give us the total for all the 4 employees for the week. Times that by 12, it will give us the hours for the full year, assuming all other variables being held constant. Now, annual leave holidays per year, so that means there are 3 weeks in a year where the employees will be given a leave. Then obviously when an employee is given a leave, that means this time that employee will not be working, meaning all these 4 employees, they are entitled to 3 weeks of or not at work time. That will be their leave. Public holidays per year, there are 7 public holidays in this year, which obviously this holiday fall within Monday to Friday, meaning within the 5 working days. So now we need to remove our total time, which is the 3 weeks, and also remove the 7 days for all the 4 employees for the full year, so that we get to the time that the employees become productive in their workplace. Normal idle time. What is idle time? Idle time is the time that the employees are not doing anything. There could be different reasons why employees will not be doing anything. Either the machine is not working, or either they're just moving from one place to another. Then now that will, after they've clocked in as if they're on duty, then 15% of their variable time is classified as not productive, meaning idle time. Employees probably moving around or with a broken machine or doing something that is not productive related. Annual bonus on month's salary for every employee for Christmas. So at the end of the year, there is a bonus that is given to the employees for their Christmas bonus. But we are not told that there is a bonus to be taken into account as stated below. And we are not told if this is the week that they're supposed to receive their bonuses. Car allowance, there is 1,000 per month per employee. Take note, it is per month per employee, meaning if we want it per week, we'll have to divide by 4, because there are 4 weeks in a month, so that we get to 250 of the allowance. Clothing allowance, this employee is allowed some allowance for clothes. It is 1.5 per quarter per employee. Then we need to say how many months do we have in a quarter. A quarter has 3 months, and each of this month are made of 4 weeks. So now we need to convert that clothing allowance to become a per week clothing allowance. So I'll also do that conversion as I progress with my calculations. It's 1.5 per quarter per employee. Then we go now to the next one, which is basic salary per basic monthly. Take note, basic monthly salary. It is 3,850 divided by 4. We will get it per week. Then now we deal with the per week wage statement in this case, remember. Then now we go to the next one. The next one, it is our deductions, which we know that deductions will always be there. And the first deduction that is provided to us is our medical aid. And medical aid, it is 20% per annum on the basic wage. 60% of this 20% is paid by the employer, and 40% is paid by the employee. So now our focus is on the employee who pays 40%. Remember, this is 60 to 40. 40% of 20% is 8%. 40% of 20% 8%, 0.4 times by 20 will give us 8%. So the employee is paying 8% out of that 20%. We first need to derive the 20%. Then after we calculate the 8% out of the 20%. Then after what else? Oh, clothing allowance, I forgot it. Clothing allowance, we have to divide this by 12 because there are 3 months in a quarter, and each month is made of 4 months. So this will be 125 rand clothing allowance. Then after we have pension fund, 7.5 by the employee and 15% by the employer. Remember, we're still focusing on the employee when we are doing the wage statement. The one that is contributed by the employee is only the employer is only when we do calculating the total cost to the company. 2% of UIF, which 1% is by the employer, 1% by the employee, and focusing on the 1% pays you earn 25%. Then after, there is no other deduction. Therefore, now we can go to our basic wage, which is 3,850. We divide it by 4 so that we get it per week. So that will be our so-called normal wage. Normal wage being 3,850 divided by 4, we get an amount of 962 rand 50 cents per week. Then we have allowances, which is car allowance, if I still remember the first one, and clothing allowance. Clothing allowance, car allowance was 250, which was 1,000 divided by 4 because we had car allowance of 1,000 per month, of which we are doing a wage statement for a week. So we need it for a week, which is 250, and clothing 125 rand per week. That is allowed as clothing allowance. Remember, these employees are allowed to enjoy clothing of 125 a week and to enjoy car allowance that is worth 250, which they were going to pay for such if it was not given by the company. So that is classified as gross income or gross wage. So we don't have any other allowance. There is no bonus that need to be taken into account. So now from here we can immediately get to our gross salary or gross wage. So this will be gross wage. Gross wage will be 962.50 plus 250 plus 125. This gives us 1,337 rand 50 cents. Then after, what deduction must go after the gross wage? It is always pension fund. Then after, retirement annuity fund, but we don't have retirement annuity fund here. We only have pension fund. This is the first deduction that is calculated from the basic wage or the normal wage, not the actual wage. I think it was 7.5 contributed by the employee in terms of the pension fund. 7.5 is contributed by the employee, and it is calculated from the basic wage or the normal wage. What does that mean? It means we calculate it from the 962.50, not from the gross wage. And again, pension fund is non-taxable. It's non-tax deductible. 962.50 times by 0.075. This gives us 72 rand 19 cents. 72 rand 19 cents is our pension fund. Remember, if there was retirement annuity fund, which is rough retirement annuity fund, we'll also have to deduct it before the all other deductions can take place. Just after gross income, we deduct these two. Then after, we have to indicate them as negative and draw a line in order for us to get to what is taxable, which is our taxable income. Then taxable income will be 1,337 rand 50 cents minus 1 or minus 72 rand 19 cents, and this will give us 1,265 rand 31 cents as our taxable income, where our tax will be deducted from and other deductions will be deducted from. Then now we have to say deductions. After that, immediately we say deductions, and I say the deduction that go through. The first one is pay as you earn. Pay as you earn. First deduction is your tax. Second deduction, it is UIF, Unemployment Insurance Fund. Then after, you have your medical aid. Then after, there will be trade union or union membership, if there is a union membership, but in this case we don't have a union membership. But just bear in mind that previously there was a house bond that you needed to take into account, and any other deduction that might be relevant. Then pay as you earn, it is calculated from a given percentage. Very unlikely that there will not be a percentage when it comes to the pay as you earn. Pay as you earn is 25% per annum deducted by the employer from the employee's salary and paid over to SARS. And they have to say per annum, and I will not be able to explain this now unless you do tax 1, because tax tables are done per annum. So hence the rate is for the full year. But that does not mean that we must make any adjustment for the fact that this percentage is per annum. We keep it like that because our tax tables are per annum. So now we have to say 25% multiply by that, we get 316 rands 33 cents. So this will be 316 rand 33 cents. This is our pay as you earn. Please do show your calculation there in brackets. 1265.31, multiply this by 25%. UIF, we also know that UIF is 1% of 1,265 rand 31 cents, times this by 1%. Then now this 1% is calculated from the basic or the normal wage once again, which is 1,000, not medical aid. That is UIF. Then we say 1,265.31 times by 0.01, which is 1%. We get 12. Just verify that. No, 962.50. I always make this mistake. Times by 0.01. I say by mouth is from basic, but when I do calculation, I normally use the net or the taxable income. 9.63, which is from the basic wage, remember, not the taxable income. Our medical aid, let us go and get clarity. As a reminder that medical aid, it is 20% of the basic wage, of which 40% of that is by the employee. That means we need to say 9 divide here by 0.01. We go back to where we are, times by 0.2. We get 192 here, 192.50, of which 40 over 60 times by 0.4, it gives us 77 rand. So now the 77 rand is paid by the employee, and that is the one that we are looking for. 77 rand, no cents. Then we know that the total amount of this divide by 0.4, going back, it was 192. Just want to write somewhere there that the full amount was 192. Then we had 192 in total. Then this 192 minus 77, the rest is the contribution by the employer. The 115.550 is the contribution by the employer. Remember, we'll need that when we are calculating now the total cost to the company. Then we can draw the line for our total deductions. Our total deductions are made of 1,265 rands. 31 cents minus, before that, 316.33 plus 9 rand 63 cents plus 77 rand. This gives us 402 rand 96 cents minus 1,265.31. This gives us the net wage of 862 rand 35 cents. This is our net wage. This is the amount that is due to the employee. Net wage. This is the amount that is due to the employee. The deductions are due to the different companies. Tax, which is pay as you earn, is due to SARS. I did mention this before. UIF will go to Labor Department, and medical aid will go to the medical aid company. It could be any other medical aid company that this company has agreed to put their staff under. So that will be it when it comes to the first requirement. Now we go to the second requirement, where we're calculating number B, the cost to company. And the cost to company, we say it is gross for all employees. Take note of that. It is the gross for all of the employees. And we do have our gross for all the employees. Gross for all the employees. Gross for all the employees. Just want to clear that first. We're calculating now the second requirement, where we calculate the total annual cost to company for all the 4 employees. Now, how do we do that? We need to account for all the costs for the full year. Take note. And we're told that annual bonus on month salary for every employee, or 1 month, sorry, I did an error there. It is 1 month salary for all the employees. I'm just noting now, it cannot be on month. It has to be 1 month for all the employees, and that I can guarantee you on that. So my meaning, for every employee is entitled to a 1 month salary. So because of that, we need also to account that, because it is a cost that is to a company. So now let us start first of all with the monthly salary. Employees are being paid 3,800 per employee. How many employees do we have? We have a total of 4 employees. So we need the total cost to company for all the 4 employees. So we need to be mindful of that, that we start with the normal wage for all the 4 employees. Normal wage for all the 4 employees. How do we calculate that? It is 3,850 times by 4. This 4 is for the number of months. The number of weeks in a month. So this is a monthly salary for 1 employee. Take note of that. It is a monthly salary for 1 employee. How many employees do we have? How many employees do we have? We have 4 employees times by 4, and they are earning I said 3,850. This is per month times by 4 employees. Yes, so this is for all the 4 employees that we have. Then now they are earning this for the full 12 months. So it will be 184,000. Again, 3,850 times by 4 employees is per month times by 12 months. Then we get to the normal salary of 184,800 for the full year. 3.850 is for the month. If we want, we can say 3,850 times by 12 months, which is salary for full year. For how many employees? Times by 4 employees, 184,000. Then we need a bonus. We need a bonus. Remember, these employees, they are being paid per week. So now it has to be, they're being paid per week, which is their 4 months in a week. So now we need their salary for the month. Remember, it is 3,850 for one employee, meaning each employee will receive 3,850 on the month of their bonus, because we are told that each employee gets a 1 month bonus, and it's only once in a year. It's 1 month bonus once in a year. 1 month salary for every employee for Christmas, only once off for Christmas, and a year does include a Christmas. So that is why now we say 3,800 for one employee times by 4 employees, meaning all the 4 employees will receive a total of 15,400 for all 4 of them. Take note of that. Each employee will receive 3,850 in the month of December, which is Christmas. That is a bonus. Then after we go to allowances, and under allowances, I just want to go straight and write the name of the allowance. Car allowance. The car allowance was 1,000 if I still remember, and 1,000 was for a month. Let me verify that. We had car allowance 1,000 per month per employee. How many employees do we have? 1,000 times by 4 employees times by 12 months, because they are receiving this every month. So that means these employees are receiving a total for the full year of 48,000. All of them, they are sharing, in other words, from this 48,000. Then there was clothing allowance. There was clothing allowance. And per quarter, these employees were enjoying a benefit of 1,500 per quarter. And how many quarters do we have in a year? We have 4 quarters in a year. So now each employee is enjoying 6,000 times by 4 employees. That means all these 4 employees, they are sharing from this 24,000 rands of clothing allowance for the full year. They are sharing from this 24,000 of clothing allowance for the full year. Then now I don't know why I continued here. Then I need to add now all the deductions all the costs that are contributed by the company, of which the first one is pension fund. The company is contributing on pension fund 15%, if you remember, 15% of the normal wage. And they said pension fund 15% by the employer from the basic wage. Now we have to use the basic wage for the full year and for all the employees, meaning 15% of that will be the pension fund contributed by the company. We are calculating the cost to the company, 184,800 times by 0.15. That will be 27,720. This is 27,720, which is the pension fund contributed by the employer. Another one is the medical aid. Medical aid. The company does contribute to medical aid. And let us check how much is the percentage contributed by the company and from which amount. Medical aid is from the basic wage, and the company is contributing 60% out of the 20%. So now we need to say 20%. I don't want to go to that small calculation that I've done before, which I can use that one also. 0.20 times by 184,800 times by, times by 20%. This is the total of the medical aid, which is 3,000. But the company only contributes 60% out of that, which is 22,176. So this will be 22,176, because the total, it is 20% of the 184,800, which is the basic wage. This is the normal wage or the basic wage for all the employees for the full year. and medical aid in total is 36,960. That is in total, of which the company contributes 60% out of that, meaning 60% is paid by the company. So now hence we say term by 0.60. Although it is gone, that is not a problem. So now that is where now the 22,760 comes from. Continue on the same page, which I don't like it, but unfortunately the next one, it is UIF. UIF is 1% of the basic wage. How much is our basic wage? It is 184,800 for all the employees for the full year. Term by 0.01, then the company will contribute UIF of 1,848 rand for all the 4 employees for the full year. Then after, now we need to calculate the total cost for 4 employees. Total cost for employees. Total cost for all the 4 employees. Let us calculate it, starting from 184,800 plus 15,400 plus 48,000 plus 27 plus 24,000 plus 27,720 plus 22,176 plus 1,848. I get 323,944. So that is the cost to the company for all the 4 employees, which is requirement number B. Requirement number C, which is the last requirement, within 35 minutes I should be done, is the total labor or the labor recovery rate per hour. Recovery rate, what is the formula? Because there is a formula for the recovery rate. Your recovery rate formula is made very plain and very clear from your handout, that it is the total cost to the company divided by the total hours. It is the total gross amount paid divided by the total hours worked. So let us calculate now the total hours that were worked. How are we going to know the hour that were worked? We need to go to the information provided. We're told that our employees, they work how many days? 5 days in a year. They work 5 days in a week, 8 hours. There should be 8 hours per day, and they work 5 days a week, and they have public holiday 7, and they also have 3 weeks of leave. Let us read if there was no further information that was provided to us, but we know that each and every month is made of 4 weeks. 4 weeks per month for this calculation only. Okay, there is no further information that is further explaining anything. So now we need to calculate the total hours that are available. Now our total hours will be calculated for all the employees that we have. How that is going to happen? We need to say 8 times by 5. It will give us 40 hours. 40 hours that are being worked in each and every week. Then we multiply the 40 hours by, then meaning this is for each employee. Then we need to multiply this by the 4 employees. 40 by 4 employees. And remember, these employees, they work only for 1 week. That is for 1 week. Then we need to convert it into the full year. 40 times by 4 employees. Then we need to take into account now the number of weeks that we have in a year, which is normally stated in most questions, but they did not specify in this question very clearly. but we know that there are 52 weeks in a year. I'm just looking for that assumption which is not clearly stated. So let me just put it for you. Assume 52 weeks in a year. Normally a year has 52 weeks. So now what does that mean? That means now we have to say normal time. Our normal time is 8 times by 5 is equal to 40 hours a week per week, times by 4 employees. Then after we times by 4 employees, we times by 52 weeks. Remember, 40 is per week. This is the number of employees, and this is the number of weeks these employees are working, which gives us 8,320 normal time. We need to say let's leave. These employees, they will be on leave for 3 weeks. 3 weeks times by 4 employees times by 40. 3 weeks times by, because each week is made of 40 hours. So now that means 120 hours will be lost, and we multiply this by all the 4 employees that we have. We get to deduct 480 of leave. Take note, 3 weeks for each of the employees. They will be on leave, given 3 weeks not to be working. So 3 weeks times by 4 employees, meaning total weeks, total weeks that will be lost will be 12. That will be lost. It's a total of 3 weeks times by 4 employees. So this will be the total weeks that will be lost. 3, 6, 9, 12. Yes, 12 weeks that will be lost for all the 4 employees, times by the number of hours for each week, which is 40. That means leave time that will not be worked will be 480. Then there are public holidays that need to be deducted, because during public holidays these employees, they are not working. So now we need to look at how many public holidays will these employees not be working. We are told that for 7 days in this year these employees will not be working because of public holidays. So now we need to deduct this 7 days times by number of employees, because all of them, they are not working, times by the number of hours that they work in a day. Remember, these are days. Now we need to deal with the number of hours in a day. So now this will give us the total hours that will be lost because of public holiday. 7 days times by the hours per day, it is 560 hours that will be lost for all the 4 employees. We get to 2000. We get to why is it 2000? We have 7 times by 4 times by 8. We get 224. So now this is the time that will be lost because of public holiday. We have 224. So now that will give us available time. That will give us available time. The time that will be available will be plus 480 equals minus 8,320. Time that will be available 7,616. That is available time, because we know that 3 weeks this time is not available. 7 days in a year, 7 different days in a year, that time is not available. Why? Because employees will not be working, either on leave or it's a public holiday. Then we were told that some of this time employees are not productive. It was called the idle time. Remember, unproductive time, it is called idle time. And the idle time was said to be 15% of the available time. And our available time, we already know how much is it. So now, meaning total less idle time. And I just want to say total time, to be honest. Total hours available My total time available is 7,616 times by 85%. I deducted 15% times by 0.85. Then this gives me 6,474 hours. We are to round up in this case because it is that's how they wanted it to be, but it's preferable to just keep even the seconds that are there on the side. Then one can also write here idle time, which I don't have problem with it. Idle time is 7,616 times by 15%. 7,616 times by 15%. This is 1,142 rand 40 cents. Not 40 minutes, or 0.40 minutes. Then after we say minus 7,616, that is where the 64.73 is coming, 74 is coming from. Then now we are calculating the recovery rate. Recovery rate is equal to total cost to the company, and our total gross, it is 232,000. Let us check in there. 233,000 or 323,000. 323,944 divide by total hours available, 6,474. This will be the recovery rate, 323,944 divide by 6,474. We get 50 rand 4 cents as our recovery rate. This was my main focus for the day, just to calculate, or being able to calculate the recovery rate, more especially being able to deduct the leave time for 3 weeks of each for 4 employees, and each week has 40 hours, and that is the very important one. And also deducting the public holiday, which is 7 days, and every day is 8 hours that is lost for all the 4 employees. Then after we deduct that one out, not forgetting how to calculate our normal time, assuming 52 weeks in a year, which was not specifically specified in the information. With that, guys, thank you very much.